Welcome to the Recon Trader. In today's video, I will show you why trading without a stop loss order is like going into battle without armor. You might get away with it in the short term, but eventually you're going to get killed. And today's market is perfect proof of that. Today, Bitcoin, for instance, is selling off. There's blood in the streets. More than likely, there's a lot of traders who entered around this level seeing this positive push up, only to see it turn over and bleed out. And a lot of those traders, unfortunately, probably did not have stop losses in place and right now are feeling the pain. So if you're new to trading, you're probably asking, what is a stop loss order? A stop loss order is basically a predetermined level to cap losses on your current open positions. Most stop loss orders can be executed via an automated trading system, i.e. your exchange software, or mentally. Basically, you're clicking the sell button when price action reaches a certain level.
Well, that's my safety, sir.
It is also important to understand stop loss orders are typically market orders and do not guarantee the fill price will be the same as your stop loss order trigger price, as is common with a flash crash. You might have your trigger price set at $10,900 in the case of Bitcoin today, and if it flashes quickly down, you might not get filled till somewhere in the 10,008 levels. That's still better than where it's actually crashed down to currently. So let's get a little bit into the weeds on automated versus mental stop loss orders. The advantages of a automated stop loss order is you don't have to monitor your position over an extended period of time, and it helps eliminate the emotional influences and the lack of discipline that a lot of traders actually have. Now for me, this is my stop loss in most cases when I'm day trading. It is the mental I physically click to get out of the position. Now, the disadvantage of the mental stop loss order is your emotional influence to let the price try to recover. And if you're not disciplined, I've seen a lot of traders sitting on their hands hoping for that price action to recover, and it never does. So if you're going to do the mental stop loss order, I can't stress enough, you have to be extremely disciplined. And if you're not disciplined, then the automated stop loss is really the solution for you. Now let's take a look at a trade I actually entered this morning and got stopped out of, but I'm glad I got stopped out when I did. So let's take a look at the chart. Now I always have predetermined entry levels and stop loss and take profit levels. So in this case, on my radar popped up XTZ USD on the 1 hour Coinbase chart. And I was looking for price action to come into this 220. And on the daily chart, if you look back, you can see where 220 had been previous resistance and then eventually became support. And that price action is what determined my entry on this trade this morning. And so when I saw the price come down to the 220, actually bounce up, I wanted to enter actually above the 222 zone, and I actually got in at the 223. I thought there had been enough recovery to go ahead and enter. And I would have my stop loss set at that 220 support. And as the trade started to develop, the price action started to move in my direction. However, shortly thereafter, it again started to break down. So I decided to go ahead and stop myself out. Now I did that manually. I clicked the sell button just below the 220 mark. Sometimes that whole numbers or zeros or fives can be psychological areas. So I stopped out just below the 220 at around 219 and change. Eventually, the price started to move back up. And this is where some people get that hope of, I'll just let it sit, it'll turn around, and they start thinking, see, good thing I didn't stop out at that 220 level. It would really pay off, and actually it doesn't. It ends up turning over and bleeding out for a much deeper loss. So exiting here as the price action played out, it actually ended up selling off, and I felt pretty good about being disciplined and exiting the trade when I did, because it could have turned into a much deeper loss. And if you are a regular viewer of my videos, that's why you hear me constantly hammer stop loss orders are so important. So let's take a look at some of the rules you might set up for your stop loss orders. And the number one rule for me is I always predetermine the stop loss price or percentage before I enter a trade. And now number two is just as important, and I never move my stop loss order lower, or if I'm short, higher. That has taken years of discipline when I'm doing it manually. In the beginning, honestly, I had to do it automated because it is way too tempting to let the price action move if you're doing it manually. So if you don't have that discipline, definitely use the automated stop loss orders and don't move them. I've seen some traders actually unautomated see the price action getting close to their stop loss only to go in and adjust it down. Number three kind of applies to what I mentioned earlier, is try to avoid setting your stop loss trigger prices at support, resistance. You might want to go a little bit below or above. And you also want to try to avoid psychological prices like whole numbers, like $1, $2, or even like half dollars, $1.50, $2.50, etc. You kind of get the idea. And so I also try to avoid zeros and fives. A lot of bots are programmed to go to, like, say 115, that 110. So I'll set mine at 114 or 109, just below those numbers that a lot of bots are programmed to seek out. And then number four, allow for volatility. Now, depending on what trading strategy you're using, a lot of times I'll have a very tight stop loss. In other situations, I'll let it have a little more room to roam. But you do need to allow for market volatility. If your stop loss orders are too tight, your position will constantly be stopped out. Now, you'll notice number 3 and number 4 have asterisks, and I'll kind of let Captain Barbosa explain that to you.
The code is more what you call guidelines than actual rules.
All right then, in conclusion, you don't need to win every battle to win the war. Losses will happen in trading. Your mission is to keep your losses small, and a predetermined stop loss order will help prevent big losses on your open positions. Also remember, if you're new to trading or you just flat out lack discipline, you must consider deploying automated stop loss orders. The bottom line is be confident in your strategy and execute your battle plan with extreme discipline. And that pretty much wraps it up. So if you like this type of video, be sure to subscribe. I'll be doing more in the future. Also, if you liked this video, spike a like, and be sure to leave your comments down below on the type of videos you'd like to see me create. I do read through those comments. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.